Most people sense that something is wrong, but they cannot quite name it, and that unease is exactly why this conversation matters and why you should stay until the very end. What is coming is not a single event, not a dramatic headline, and not a sudden crash that everyone agrees on in the moment. It is a slow collapse disguised as normal life, a gradual tightening that only becomes obvious where once the exits are gone and the choices are no longer yours to make. By the time the average person realizes what has happened, the rules will already be rewritten, ownership will already be redefined, and the future they assumed was guaranteed will be permanently out of reach. Before we get into this, make sure you like the video, share it with someone who still believes everything is fine, subscribe to the channel, and click the notification bell, and select all if you want more Angry Guy content and want every single video the moment we release it. That support is how this channel survives in an environment that does not reward uncomfortable truth. Also, if you care about protecting yourself financially and understanding how to operate outside of a collapsing system, check out Angry's Crypto Academy, which is linked in the description of this video. The Academy is where you learn how to buy, sell, and trade crypto responsibly, how to safeguard your assets, and how to grow your wealth instead of watching it decay under inflation and bad policy. It is built for people who want options and leverage in a world that is steadily removing both. And if you are enjoying these Angry Guy videos and want to show direct support, you can buy me a Red Bull using the link in the description. That support keeps this channel independent and focused on telling the truth without compromise. Now, let us talk about what is actually happening because the economy is not heading toward a mild correction or a temporary slowdown. It is moving toward a structural breakdown, and housing is the center of the storm. The average homeowner today has roughly 70% of their net worth locked into their home, not because that was a smart or intentional strategy, but because wages stagnated, costs exploded, and housing became the only asset that appeared to rise fast enough to keep up. People were told that home values always go up, that real estate was safe, that it was the cornerstone of the middle class, and they believed it because they needed something stable to believe in. That belief is now becoming the trap. When housing values fall, this is not like a stock portfolio dipping on a screen. This is personal. This is emotional. This is families realizing that the thing they were told was their security is now an anchor dragging them down. Once prices start falling meaningfully, fear replaces confidence and fear accelerates selling. Homeowners who are already stretched by taxes, insurance, maintenance, and debt will not wait politely for a recovery. They will sell below market just to escape the pressure. And once that cycle starts, it feeds on itself. This is where large investment firms enter the picture, not as villains in a movie, but as rational actors following incentives that were deliberately created. Companies like BlackRock and Blackstone do not need housing prices to rise forever. They need volatility, liquidity, and distress. When individual homeowners are forced to sell, these firms step in with cash, buy properties in bulk, and remove them from the ownership market permanently. Those homes do not return to families. They return as rental units managed by algorithms, priced dynamically, and held indefinitely. Over time, this changes the nature of society itself. Ownership becomes rare. Renting becomes permanent. Stability becomes conditional. You no longer build equity. You no longer pass property down. You simply pay for access month after month, year after year with no finish line. This is not an accident, and it is not new. It is the predictable outcome of policies that favored asset inflation, financialization, and centralized capital over productive labor and individual ownership. It is important to understand that the system could not exist without broad public participation over decades. Baby boomers did not cause this alone, but the voting patterns, political priorities, and investment decisions of that generation made it possible. They supported policies that inflated asset values while hollowing out the real economy. They moved retirement money into massive funds that consolidated power. They benefited from rising prices and then pulled the ladder up behind them, often unintentionally, but the effect is the same. Now, younger generations are being told to accept permanent renting as normal, to accept debt as a lifestyle, to accept that privacy is outdated, and to accept that ownership is no longer realistic. They are told this is progress. They are told this is sustainable. They are told this is fair. None of that is true. What is coming next is the enforcement layer. Once people are financially dependent, heavily indebted, and asset poor, control becomes easy. Digital systems are introduced as conveniences, then as standards, and finally as requirements. Digital identification, centralized financial tracking, and programmable money are sold as solutions to fraud and inefficiency, but their real power is behavioral enforcement. When access to money, housing, travel, and services can be conditioned instantly, compliance replaces freedom without a single law ever needing to be passed openly. This is why reducing debt is not just a financial decision, it is a survival strategy. Debt is leverage over your future. The less debt you have, the harder you are to pressure, and the more options you retain when systems begin to fail. Paying off consumer debt, avoiding unnecessary obligations, and refusing lifestyle inflation are not signs of weakness or pessimism. They are acts of quiet resistance. For those who remain in the United States, the strategy must shift from participation to insulation. That means owning tangible assets that do not depend on constant economic growth or institutional approval. Land matters because it can produce food, shelter, and independence. Skills matter because they cannot be inflated away. Community matters because centralized systems fail from the top down while local cooperation survives. Building a ranch or a self sufficient property is not about fantasy or escaping society. It is about optionality. It is about knowing that if systems break, you can still function. Electricity, constant connectivity, and modern conveniences are useful, but dependency on them without alternatives is dangerous. The more complex the system, the more fragile it becomes under stress. For others, the smartest move will be leaving entirely. There are still countries that encourage property ownership, that welcome foreigners who contribute, and that maintain stable, sane economic structures. These places are not utopias, but they offer breathing room, legal clarity, and a future that is not entirely pre sold to corporate interests. Looking overseas is not running away, it is choosing terrain wisely. What most people fail to grasp is that waiting is the worst possible strategy. By the time a crisis is obvious to everyone, the best moves are already gone. Prices are already distorted. Rules are already changed. Exits are already crowded or closed. Those who act early are labeled alarmists until suddenly they are simply gone, watching from a distance as the rest scramble. This is why the narrative matters. If people believe this is just another cycle, they stay passive. If they believe housing always recovers, they hold too long. If they believe institutions will protect them, they outsource responsibility. History shows the opposite. Institutions protect themselves first. Systems are redesigned to preserve power, not fairness. The uncomfortable truth is that private property ownership is being quietly redefined, not banned outright, but made impractical, expensive, and legally complex for individuals while remaining efficient and profitable for large entities. Taxes, regulations, compliance costs, and financial barriers slowly push ownership out of reach. The end result looks voluntary on paper, but coercive in reality. None of this requires conspiracy. It requires incentives, apathy, and time. And time is exactly what people think they still have. If you are listening to this and feeling a mix of anger, disbelief, and motivation, that is a healthy response. That emotional reaction means you still recognize that something is wrong and that you still care enough to act. The goal here is not fear. The goal is clarity. Fear freezes people. Clarity moves them. You do not need to predict the exact timing of a downturn to prepare for it. You do not need to convince everyone around you. You need to reduce exposure, increase independence, and stop assuming that yesterday's rules will protect tomorrow's life. Hey guys, in a world pushing you to own nothing and be happy, crypto is your key to survival. Join Angry's Crypto Academy to master buying, selling, and trading crypto. Make huge profits and safeguard your wealth. Plus, discover the one crypto virtually no one is talking about, poised to create new millionaires in the upcoming bull run. The link is in the description of the video below. Go check it out now. That mindset shift is the real beginning of walking away from a sinking system. As this unfolds, you will see media narratives shift rapidly. Housing downturns will be framed as opportunities. Renting will be framed as freedom. Digital control systems will be framed as safety. Those narratives will sound reasonable until you examine who benefits and who loses long term. Always follow incentives. Always ask who gains ownership and who gives it up. The reason this message matters is because most people are still anchored to old assumptions. They believe effort guarantees security. They believe loyalty is rewarded. They believe patience is enough. In a financialized, centralized system, those beliefs are liabilities. Walking away does not mean disengaging from life. It means disengaging from illusions. It means choosing autonomy over approval and resilience over comfort. That path is harder at first, but easier later. The compliant path is easy at first and brutal later. This is the crossroads. It does not come with a sign or a deadline, but it is here. Those who recognize it early can still position themselves. Those who ignore it will eventually be positioned by others. We are not heading toward a dramatic collapse that resets everything cleanly. We are heading toward a managed decline where ownership, privacy, and choice are rationed quietly. That reality does not need to be accepted, but it does need to be understood. And this is only the beginning of the conversation. One of the biggest mistakes people make when facing a systemic shift is assuming that the system they grew up with is the default state of reality. They confuse familiarity with permanence. The post-war economic model that created mass homeownership, stable wages, and predictable upward mobility was an exception, not the rule, and it was held together by conditions that no longer exist. Cheap energy, favorable demographics, limited global competition, and a population that trusted institutions created a brief window where prosperity felt normal. That window is closing, and pretending otherwise only delays the moment when adaptation becomes painful instead of strategic. What makes the current situation especially dangerous is how slowly it unfolds. There is no single day when housing officially stops being safe. There is no announcement declaring that ownership is now discouraged. Instead, costs rise quietly, rules become more complex, financing terms tighten, insurance premiums climb, taxes increase, maintenance becomes unaffordable. Each individual change seems manageable, even reasonable, but together they form a trap. People do not lose their homes overnight. They bleed out slowly through fees, stress, and shrinking margins until selling feels like relief rather than loss. At that point, the psychological shift is complete. Ownership no longer feels empowering, it feels burdensome. That is when consolidation accelerates because institutional buyers are not emotional. They do not panic sell. They do not worry about schools or neighbors or memories. They run spreadsheets And when numbers favor acquisition, they move decisively. This asymmetry is the core of the problem. Individuals make housing decisions based on life. Institutions make housing decisions based on control. The real danger is not just that homes will lose value, it is that homes will change purpose. A house stops being a place where a family builds stability and becomes instead a unit of yield. Once that transition is complete at scale, reversing it becomes nearly impossible. Policies can be adjusted, rates can be cut, subsidies can be introduced. But ownership, once concentrated, rarely disperses voluntarily. Power consolidates far more easily than it redistributes. Many people still believe that voting differently will fix this. That belief is understandable, but it misunderstands the structure of the problem. Political cycles operate on short time horizons. Asset consolidation operates on decades. By the time policies are debated, the assets are already owned. Governments then face a choice between disrupting large capital holders or maintaining stability as defined by markets. History shows which option they usually choose. This is why relying on institutional correction is a losing strategy. Waiting for rescue is a form of surrender disguised as patience. The only meaningful leverage individuals have is anticipation. Acting before pressure forces action is the difference between choice and reaction. Consider how previous generations responded to change. When manufacturing declined, communities did not pivot smoothly into new industries. They decayed. When pensions disappeared, people were told to manage their own retirements, but wages never adjusted accordingly. When education costs exploded, debt filled the gap. Each shift transferred risk downward while control moved upward. Housing is following the same pattern, only this time the scale is larger and the consequence is more permanent. Another uncomfortable truth is that many people are emotionally invested in denial. Admitting that the system is structurally unstable forces painful questions about past decisions, future plans, and personal identity. For many, the idea that their home is not a guaranteed store of value feels like an attack on their life narrative. That emotional attachment is exploited constantly by messaging that reassures rather than informs. Comforting lies outperform difficult truths in the short term, especially when people are exhausted. Exhaustion is not accidental. A population that is tired, distracted, and financially stressed does not organize effectively. It reacts. It accepts trade offs it would never consider under calmer conditions. And convenience becomes the currency that buys compliance. This is where digital systems gain traction, not because people demand control, but because they crave simplicity. When every transaction is digital, every account centralized, and every identity verified continuously, friction disappears. That frictionless experience feels modern and efficient until you realize that friction was also protection. It created delay, ambiguity, and space for error. Without it, enforcement becomes instant and invisible. There is no confrontation, no appeal, no human discretion. There is simply access or denial. This is not science fiction, it is already normal in limited contexts. Accounts are flagged automatically. Services are suspended algorithmically. Decisions are justified after the fact, if at all. Expand that logic across housing, employment, finance, and mobility, and you no longer need overt force. Behavior adjusts itself. Understanding this does not require paranoia, it requires pattern recognition. Systems that optimize for efficiency inevitably reduce resilience. Systems that centralize decision making inevitably reduce autonomy. These are not moral judgments, they are structural realities. That is why personal strategy must be grounded in reality, not optimism. Hope is not a plan. Hard assets matter because they exist outside narratives. Land produces regardless of opinion. Skills generate value regardless of policy. Relationships provide support regardless of market sentiment. These are not romantic ideas, they are practical ones. People often ask whether it is too late. That question reveals how deeply conditioned we are to think in extremes. It is rarely too late to improve your position, it is often too late to maintain illusions. The earlier you act, the more graceful the transition. The later you act, the more drastic the measures required. For homeowners already feeling pressure, the goal is not to panic sell, but to evaluate honestly. Can this property remain affordable if taxes rise, insurance doubles, and income stagnates? Can it be maintained without new debt? Does it provide flexibility or lock you into a single geographic and economic outcome? These are not emotional questions, they are strategic ones. For renters, the situation is different but no less serious. Renting can offer mobility, but only if supply remains competitive. As ownership consolidates, rental markets become more coordinated. Prices rise faster, terms tighten, choice shrinks. Renting becomes less about freedom and more about dependency. The key difference is whether renting is a temporary tactic or a permanent condition. And this brings us to the idea of walking away, which is often misunderstood. Walking away is not abandonment, it is refusal. It is the refusal to participate in a system that extracts more than it gives. While demanding loyalty, it does not return. It is choosing a different framework rather than fighting endlessly within a rigged one. For some, that means geographic relocation. For others, it means lifestyle redesign, smaller footprints, lower consumption, greater self reliance. These choices are often framed as sacrifices, but they are actually exchanges. You trade status for stability, you trade convenience for control, you trade growth for sustainability. The cultural resistance to these ideas is intense because they challenge dominant narratives. Success has been defined narrowly for decades. Large homes, constant upgrades, visible consumption, those markers are becoming traps. The future belongs to those who redefine success around autonomy and durability. One of the most dangerous assumptions people make is that systems care about them individually. Systems care about metrics, occupancy rates, revenue streams, compliance percentages. You are not targeted personally, you are categorized. Once you understand that, emotional reactions give way to strategic thinking. Strategic thinking asks different questions. Where can I reduce exposure? Where can I increase optionality? What dependencies can I remove? What skills can I develop that travel with me? These questions lead to quieter lives that are harder to control. It is also important to address the social pressure that keeps people stuck. Fear of judgment is powerful. Choosing a path outside the mainstream invites criticism, ridicule, and misunderstanding. Many people would rather be miserable than visibly different. That preference is exploited constantly by advertising, culture, and peer dynamics. Walking away requires internal clarity. You must know why you are doing it because external validation will be limited. The reward is not applause, it is peace of mind. Another factor rarely discussed is timing. Economic transitions do not affect everyone equally or simultaneously. Those closest to financial margins feel it first. Those with buffers feel it later. That staggered impact creates confusion. Some people insist nothing is wrong because they personally feel fine. Others sound alarmist because they are already underwater. Both perspectives are partial. The truth emerges over time as pressure spreads. Media coverage often lags reality. By the time trends are acknowledged openly, they are already advanced. Early signs are dismissed as anomalies. Middle stages are reframed as adjustments. Late stages are called crises. If you wait for the crisis label, you are reacting too late. This is why storytelling matters. Humans understand change through narrative, not data alone. The story we are living through is not about a crash. It is about a transfer of ownership, a transfer of control, a transfer of risk. Once you see that story clearly, individual headlines make sense. The question then becomes personal. What role do you want to play in that story? Passive observer, reluctant participant, or deliberate actor? Deliberate action does not guarantee success, but it dramatically improves odds. It also restores a sense of agency that many people have lost. Feeling powerless is corrosive. Taking responsibility, even in small ways, reverses that erosion. As this process continues, there will be opportunities disguised as chaos. Markets will misprice assets. Regions will compete for talent. New communities will form around shared values. Those paying attention will see options where others see only loss. This does not mean abandoning caution. It means aligning caution with foresight rather than fear. Fear reacts to noise. Foresight responds to structure. The coming years will test assumptions that have gone unchallenged for generations. Housing is only one piece, but it is the most visible and emotionally charged. How people respond to changes in housing will shape broader social dynamics, including family formation, migration, and political tension. Understanding this ahead of time allows you to decouple emotionally while preparing practically. You do not need to convince everyone, you need to position yourself. This is the deeper meaning of walking away. Not isolation, but intentional disengagement from failing frameworks and intentional engagement with sustainable ones. To understand where this is heading, you have to stop thinking about the economy as a single machine and start thinking about it as a layered system of incentives. On the surface, people see prices, wages, and interest rates. Underneath that, there are balance sheets, demographic trends, and capital flows. Beneath those layers sit power structures that do not respond to public sentiment, but to stability and return. When those deeper layers shift, surface level reassurance becomes irrelevant because no amount of optimism can reverse structural math. One of the least discussed drivers of what is happening now is demographics. Large generations moving through predictable life stages create waves, not ripples. When a massive cohort buys homes, prices rise. When that same cohort ages, downsizes, liquidates, or passes assets on, supply increases. That process is not moral or political, it is biological and mathematical. Pretending it can be managed away with messaging or short term stimulus is denial. At the same time, younger generations are smaller, more indebted, and less financially stable. They cannot absorb the same volume of assets at the same prices. That mismatch creates pressure. When pressure builds, something has to give. Either prices fall, ownership concentrates, or debt expands further. We are already seeing all three at once. This is where institutional capital thrives. Large funds do not need emotional narratives, they need predictable flows. Housing provides exactly that when structured as rentals rather than homes. Renters pay monthly. Maintenance is standardized. Risk is distributed. Ownership is centralized. From a purely mechanical perspective, it is efficient. From a societal perspective, it is destabilizing. The destabilization does not show up immediately. In the early stages, people still live in houses. Neighborhoods still look normal. Life continues. The difference is invisible, but profound. The relationship between the occupant and the property changes. There is no long term stake. There is no legacy. There is no incentive to improve beyond what is required. Over time, that erodes community cohesion, accountability, and trust. This is not a criticism of renters, it is an observation about incentives. Ownership aligns long term thinking with place. Permanent renting aligns survival with compliance. When a home can be taken away with notice, behavior adjusts. People speak less freely. They take fewer risks. They tolerate more. That behavioral shift is the real prize. Control does not require force if dependency is normalized. What makes this moment particularly fragile is that many people are still acting as if they are operating under old assumptions. They take on debt, believing future income will rise. They delay hard decisions, believing stability will return. They assume institutions will intervene in their favor because that is how it worked before. Each of those assumptions increases vulnerability. The truth is that systems do not reverse course to save individuals. They adapt to preserve themselves. If preserving stability requires redefining ownership, access, or norms, that is what happens. There is no malice in that process. There is indifference. Understanding indifference is liberating. It removes the emotional need to assign blame and replaces it with the practical need to adapt. Anger wastes energy, clarity focuses it. This is why so much emphasis must be placed on optionality. Optionality means having more than one viable path forward. It means not being trapped by a single income source, a single location, or a single system. The fewer dependencies you have, the less leverage others have over you. Optionality does not require wealth, it requires intentional design. A smaller lifestyle with lower fixed costs provides more freedom than a large lifestyle financed by debt. Skills that produce value across borders provide more security than credentials tied to one market. Portable assets provide more flexibility than illiquid ones. For those considering leaving the country, the conversation must be grounded, not emotional. No place is perfect. Every country has trade offs. The goal is not paradise, it is balance. Legal clarity around ownership, predictable tax structures, cultural tolerance, reasonable safety. These factors matter more than headlines or hype. It is also critical to understand that relocation is not an escape from responsibility. It often increases it. You become accountable for learning new systems, adapting socially, and managing logistics independently. That process filters out those looking for shortcuts. What remains are people serious about building sustainable lives. For those staying, the challenge is different but equally demanding. You must learn to operate within a system you do not fully trust while minimizing exposure to its failure modes. That means staying informed without becoming consumed, participating selectively rather than passively, building redundancy quietly. Redundancy is often mocked until it is needed. Backup systems, alternative income streams, and local networks seem unnecessary in stable times. In unstable times, they are everything. Centralized systems fail broadly. Decentralized systems fail locally and recover faster. One of the reasons people resist these ideas is because they sound like pessimism. In reality, they are realism. Pessimism assumes failure and gives up. Realism acknowledges risk and prepares. Optimism without preparation is denial. Another reason for resistance is that adaptation often requires letting go of identity. Many people define themselves by career, location, or lifestyle. When those become unstable, the threat feels personal. This is where storytelling helps. If you frame adaptation as evolution rather than loss, it becomes empowering. The story you tell yourself matters. Are you someone being pushed out of a system or someone choosing a better position? Language shapes perception, and perception shapes action. There will be moments ahead when staying put feels easier than moving, when maintaining appearances feels safer than making changes, and when following the crowd feels comforting. Those moments are tests. Comfort is often the most expensive thing you can buy. It is also important to talk about timing again because timing is misunderstood. People want certainty before acting. Certainty rarely arrives before opportunity passes. Acting with incomplete information is unavoidable. The goal is not perfection, it is direction. Small steps compound, paying down debt steadily, learning new skills consistently, researching options patiently. These actions build momentum quietly. When pressure increases, those who prepared move smoothly while others scramble. Another overlooked factor is mental resilience. Living through transition is psychologically taxing. Narratives conflict, signals contradict, social pressure intensifies. Maintaining calm clarity becomes a skill. Consuming less noise and more substance helps. So does focusing on what you can control. Control is limited but not non existent. You control your spending, you control your learning, you control your associations, you control your preparation. These may seem modest, but together they define outcomes. As housing continues to shift from ownership to access, expect cultural narratives to follow. You will hear more about flexibility, freedom, and minimalism. Some of that will be genuine, much of it will be rationalization. Always ask whether the narrative increases choice or reduces it. Choice is the metric that matters. A system that expands choice is healthy. A system that restricts choice while claiming to empower is not. This is why digital convenience must be evaluated carefully. Convenience that cannot be refused is coercion in disguise. True convenience is optional. When opting out carries penalties, the system is no longer serving you. The reason these conversations are uncomfortable is because they force a reckoning with dependency. Dependency feels safe until it is tested. Independence feels risky until it proves itself. As more people wake up to these realities, you will see divergence. Some will double down on the old system, hoping loyalty will be rewarded. Others will adapt quietly, building parallel structures. Over time, the gap between these groups widens. The people who adapt early are often misunderstood. They are called extreme, unrealistic, or negative. Later, they are called lucky. Luck is usually just preparation meeting timing. This is not about predicting collapse dates or dramatic events. It is about recognizing trajectories. Trajectories matter more than moments. A system can function for years while becoming increasingly hostile to individual agency. If you feel a sense of urgency, that is appropriate, but urgency should fuel action, not panic. Panic narrows thinking, action expands it. As we move forward in this discussion, the focus will shift even more toward practical evaluation, how to assess personal risk, how to think about land realistically, how to evaluate countries without fantasy, how to balance engagement with detachment. These are not theoretical questions, they are lived ones. The goal is not to scare you, it is to prepare you. Fear fades quickly, preparation endures. And as always, remember that you are not alone in this. Many people are thinking quietly, adjusting slowly, and choosing deliberately. They may not announce it, they may not argue online, they simply act. That quiet action is what changes outcomes. At this stage, it becomes important to confront one of the most persistent myths people cling to, which is the idea that the system will warn them clearly before conditions become truly dangerous. People imagine sirens, headlines, emergency measures, and public acknowledgments that something fundamental has broken. In reality, systems rarely announce their failure honestly. They normalize it, they reframe it, they adjust definitions until the abnormal becomes routine. By the time official language acknowledges stress, most meaningful options have already narrowed. This is why waiting for confirmation is so costly. Confirmation arrives after damage, not before it. Those who waited for confirmation during previous financial transitions discovered that the confirmation itself was the signal that it was too late to act comfortably. The pattern repeats because human psychology does not change, even when circumstances do. Another deeply ingrained belief is that hardship will be shared evenly. People assume that if conditions worsen, everyone will suffer together, and therefore no one will be singled out or left behind. History shows the opposite. Systems under strain protect central nodes first and peripheral participants last. Those closest to power, capital, and compliance frameworks are stabilized. Those further out absorb volatility. This creates the illusion of fairness early on, followed by sudden stratification later. This stratification is already visible in subtle ways. Some people experience rising costs as inconvenience, others experience them as existential threat. The difference is not morality or intelligence, it is position. Position determines resilience. Housing amplifies this dynamic because it intersects with identity, family, and long term planning. When housing becomes unstable, everything downstream destabilizes with it. Marriage rates shift, birth rates decline, migration increases, political polarization intensifies. These are not isolated trends, they are consequences of insecurity. Insecure populations seek certainty. Certainty is often offered in simplified narratives, rigid rules, and centralized authority. This is how freedom erodes without resistance. People trade choice for predictability, believing it is temporary. Temporary measures have a habit of becoming permanent. One of the most effective ways systems maintain compliance is by overwhelming individuals with complexity. When rules become too intricate to navigate confidently, people defer to intermediaries. When intermediaries become mandatory, autonomy disappears quietly. This is why regulatory complexity almost always favors large entities over individuals. Large entities can absorb compliance costs, individuals cannot. The same logic applies to property ownership, taxes, permits, inspections, financing requirements, and insurance obligations accumulate until ownership feels like a liability rather than a benefit. At that point, selling appears rational. The transfer looks voluntary. The outcome is predetermined. People often misinterpret this as market evolution rather than market capture. The difference matters. Evolution implies adaptation to broad benefit, capture implies optimization for narrow control. The emotional weight of these realizations can be heavy, especially for those who built their lives around promises that no longer hold. It is tempting to reject the analysis simply to preserve emotional stability. That response is understandable, but it comes at a cost. The more productive response is grief followed by adjustment. Grief for an expected future that will not materialize. Adjustment toward a future that can still be shaped. Skipping the grief leads to denial. Staying in grief leads to paralysis. Moving through it leads to action. Action does not require drastic leaps, it requires direction. Direction gives meaning to effort. Without direction, effort feels futile. With direction, even small steps feel purposeful. One of the first shifts people must make is redefining what security actually means. For decades, security was outsourced. Employers provided stability, governments provided backstops, markets provided growth. That framework no longer functions reliably. Security now comes from adaptability. Adaptability is not chaos, it is structure designed for change. It means fewer rigid commitments and more flexible capabilities. It means designing your life so that disruption does not equal disaster. This is where the concept of lifestyle compression becomes powerful. Reducing fixed expenses increases freedom exponentially. Every dollar not required to maintain appearances is a dollar that buys time, options, and leverage. This is not about deprivation, it is about efficiency. Efficiency is misunderstood culturally. It is often confused with cheapness or minimalism. In reality, efficiency is alignment. Spending aligns with values, effort aligns with outcome, resources align with goals. When alignment exists, resilience follows naturally. Another area that deserves serious attention is social dependency. Many people rely on networks that are conditional on conformity. When values shift or stress increases, those networks fracture. Building relationships based on mutual respect, shared effort, and practical cooperation creates a different kind of support. These networks are quieter, but far more durable. Durable relationships are built through shared responsibility, not shared consumption. They are strengthened by trust earned over time, not by convenience. In times of transition, these relationships matter more than any institutional promise. There is also an internal dependency that must be addressed, which is the need for external validation. Systems reward visible compliance. Stepping outside them often removes praise and recognition. This can feel like loss even when the trade is beneficial. Learning to operate without applause is a critical skill. Many people delay change because they fear being wrong publicly. They fear regret. Ironically, inaction produces the regret they were trying to avoid. Regret compounds quietly, just like preparation. Another trap is comparison. Watching others appear comfortable can undermine resolve. What is not visible is debt, stress, and vulnerability. Appearances lag reality. By the time struggle becomes visible, it has already been endured privately for years. This is why it is dangerous to benchmark decisions against surface level observation. Your situation is unique, your risk tolerance is personal, your timeline matters. As the economic environment becomes more fragmented, centralized narratives will lose credibility. People will turn to peer networks, alternative information sources, and lived experience. This decentralization of understanding creates confusion, but also opportunity. Those who can synthesize information calmly become anchors for others. Calm is not passive. Calm is controlled focus. It allows you to assess without overreacting. It allows you to plan without rushing. It allows you to lead quietly when others panic. Leadership during transition rarely looks like authority. It looks like competence. It looks like preparedness. It looks like stability under pressure. Those traits attract trust naturally. As housing shifts further toward institutional control, expect political rhetoric to intensify without meaningful structural reversal. Policies may attempt to soften edges without addressing consolidation. Subsidies may be introduced that inflate prices further. Regulations may increase that burden individuals while exempting large entities. This pattern has played out repeatedly in other sectors. Understanding this prevents disappointment. Disappointment drains energy. Acceptance frees it. Acceptance does not mean approval. It means acknowledging constraints honestly so you can operate within or around them effectively. Operating around constraints often means thinking globally. Borders matter less to capital than to people, but that gap is narrowing. Remote work, portable skills, and digital assets create mobility that did not exist before. That mobility is a form of leverage if used intentionally. However, mobility without grounding can become instability. Balance matters. Roots can be chosen deliberately rather than inherited accidentally. Choosing where and how to live is one of the most powerful decisions you can make. It shapes cost structures, social norms, and long term outcomes. Treating that decision casually because it was once easy is no longer viable. And as this narrative continues, the emphasis will increasingly be on discernment. Not every alternative is good, not every warning is accurate. Discernment requires slowing down, verifying, and resisting emotional extremes. Extremes are tempting in uncertain times. They offer clarity and identity. They also limit flexibility. The goal is not to swing from blind trust to total rejection. It is to calibrate engagement intelligently. This calibration process is ongoing. It evolves as conditions change. What matters is building the habit of reassessment, periodically asking whether current strategies still serve current realities. People who thrive during transition are not those with perfect plans. They are those willing to adjust without ego. They treat adaptation as strength rather than failure. As the system continues to redefine ownership, success, and participation, your ability to define those things for yourself becomes increasingly valuable. External definitions shift, internal ones endure. This is why walking away is ultimately an internal decision before it is an external one. It begins with refusing to measure your worth by metrics designed to keep you compliant. It continues with designing a life that reflects your priorities rather than imposed expectations. Like that process is not dramatic, it is gradual. It unfolds through consistent choices rather than grand gestures. And as you continue listening, reflecting, and adjusting, remember that awareness itself is an advantage, and many people never reach this point. They sense discomfort but never investigate its source. They remain reactive. You are choosing to understand. Understanding changes everything. There is a moment in every long running system where participation quietly shifts from being rewarded to being required. And that moment is rarely marked by an obvious announcement. It reveals itself through subtle changes in tone, policy, and expectation. What was once optional becomes assumed. What was once flexible becomes standardized. What was once personal becomes procedural. Most people adapt automatically because adaptation feels easier than resistance, especially when resistance appears inconvenient rather than urgent. This is how normalization works. The human mind is excellent at adjusting to gradual change. It is why slow inflation feels tolerable until purchasing power has already been hollowed out. It is why rising rents feel manageable until they quietly consume a majority of income. It is why increased surveillance feels acceptable when framed as safety and efficiency. By the time discomfort turns into alarm, the baseline has already shifted. Housing is one of the most effective levers for normalization because it anchors daily life. When your shelter depends on compliance with increasingly rigid systems, resistance becomes risky. People begin to self censor, not because they are told to, but because consequences are implied. The mere possibility of disruption is enough to shape behavior. This is not an argument about intent, it is an observation about structure. Systems do not need malicious actors to produce restrictive outcomes. They only need incentives aligned toward control and predictability. Once those incentives are in place, outcomes follow naturally. Many people still believe that the worst case scenarios require extraordinary circumstances. They imagine sudden collapse, chaos, and visible disorder. In reality, the most effective forms of control operate during periods of relative calm. Stability creates compliance. Crisis reveals dependence. This is why the idea of a dramatic reset is misleading. Resets are messy and disruptive. Managed transitions are orderly and quiet. They preserve surface stability while reassigning ownership and authority beneath it. Most people prefer order, even if it costs them autonomy. Understanding this reframes the idea of safety. Safety is no longer about avoiding disruption at all costs. It is about ensuring that when disruption occurs, you are not immobilized. True safety includes the ability to move, adapt, and choose. Choice is the resource being depleted fastest, not money. Money can be earned, lost, and earned again. Choice, once surrendered, is rarely returned voluntarily. Every system that centralizes decision making reduces choice incrementally while claiming to expand access. This is why the language around access must be examined carefully. Access without ownership is dependency. Access that can be revoked is conditional. Ownership creates leverage. Access creates obligation. When people accept permanent access models for essential needs, they trade long term stability for short term convenience. This trade is often presented as progress, it is rarely framed as a loss. The reason this trade is so attractive is because it reduces responsibility. Ownership requires maintenance, planning, and risk. Access promises freedom from those burdens. What it actually delivers is permanent exposure to external decisions. This pattern extends beyond housing. It applies to transportation, employment, communication, and finance. Each shift toward access concentrates control and reduces resilience. Individually, these shifts seem minor. Collectively, they redefine society. One of the hardest lessons for people to accept is that systems do not care whether outcomes feel fair. They care whether outcomes are stable. Stability can coexist with inequality, dependency, and dissatisfaction for long periods. As long as disruption is contained, the system persists. This is why appeals to fairness alone rarely produce change. Change occurs when stability is threatened. Until then, adjustments favor those who already control resources. This understanding can be discouraging if interpreted fatalistically. It becomes empowering when interpreted strategically. If stability is the priority, then individuals must design their lives to remain stable even when systems shift. Stability at the personal level comes from redundancy, adaptability, and low dependency. These are not glamorous traits. They are rarely celebrated publicly. They are effective privately. Redundancy means having backups that do not rely on the same assumptions, multiple income streams that are not correlated, multiple skills that are not platform dependent, multiple options for residents that are not tied to a single jurisdiction. This is not excess, it is resilience. Adaptability means being willing to revise plans without attachment to sunk costs. It means recognizing when conditions change and responding without ego. Many people remain trapped not because they lack options, but because they refuse to abandon plans that no longer make sense. Low dependency means minimizing obligations that limit movement or choice. Long term debt, rigid contracts, and lifestyle inflation all increase dependency. Reducing them increases maneuverability. None of this requires isolation or extremism. It requires awareness and discipline. It requires saying no to some things that society says yes to automatically. The pressure to conform will increase as divergence becomes more visible. Those who opt out of mainstream paths challenge the legitimacy of those paths. That discomfort often manifests as criticism. Understanding this dynamic helps you interpret feedback accurately. Criticism does not always mean you are wrong. It often means you are early. Early movers are uncomfortable because they disrupt narratives. They remind others that alternatives exist. That reminder can trigger defensiveness, especially among those who feel trapped. This is why walking away is often a quiet act. Loud exits attract resistance. Quiet exits preserve energy. You do not need to announce your intentions. You need to execute them. Execution begins with clarity. Clarity about what you value. Clarity about what you are willing to trade. Clarity about what you will no longer accept. Many people struggle with clarity because they have spent years responding to external demands rather than internal priorities. Reclaiming that internal compass takes time. It is worth the effort. Time itself becomes more valuable during transition. Time to think, time to plan, time to adjust. Those constantly chasing obligations rarely have time to evaluate them. Creating space is an investment. Space can be created by simplifying commitments, reducing consumption, limiting noise. These choices free cognitive bandwidth. Clear thinking requires quiet. The modern environment is designed to prevent quiet. Constant stimulation keeps people reactive. Reaction favors existing structures. Reflection threatens them. Reflection leads to questions. Questions lead to change. As more people reflect, collective narratives begin to fracture. You see this in growing skepticism toward traditional milestones. You see it in declining participation in systems that no longer deliver promised outcomes. These shifts are often framed as cultural decline. They are better understood as rational adaptation. Adaptation is not rebellion, it is alignment with reality. Reality is that ownership is becoming concentrated. Reality is that systems favor scale over individuality. Reality is that dependency increases vulnerability. Ignoring these facts does not protect you from them. Facing them allows you to plan. Planning does not require certainty. It requires assumptions that can be tested and adjusted. Assumptions such as rising costs, increased regulation, and greater reliance on digital infrastructure are reasonable given current trajectories. Planning around those assumptions is prudent. Prudence is often mistaken for fear. In truth, fear avoids preparation. Prudence embraces it. As the housing market continues to transform, there will be moments of apparent relief. Prices may stabilize temporarily. Rates may fluctuate. Programs may be introduced. These moments can be misleading if interpreted as reversal rather than pause. Pauses are part of managed transitions. They reduce resistance. They restore confidence just enough to maintain participation. Recognizing pauses prevents complacency. Complacency is the enemy of resilience. It lulls people into thinking effort is no longer required. Effort deferred becomes effort multiplied later. The goal is not to live in constant vigilance. It is to maintain steady awareness, awareness without anxiety, awareness without obsession. This balance is difficult but achievable. It comes from focusing on what you can influence and releasing what you cannot. It comes from building a life that does not require perfect conditions to function. Perfect conditions are rare. Functional systems survive imperfection. As you listen to this, you may feel a mix of motivation and fatigue. Motivation because clarity energizes, fatigue because change requires effort. Both are normal. The key is pacing yourself. This is not a sprint, it is not even a marathon, it is an ongoing adjustment. You do not need to solve everything at once. You need to move consistently in the right direction. Consistency beats intensity. Small actions repeated over time produce durable outcomes. Drastic actions taken impulsively often create new problems. Durability is the theme that ties everything together. Durable choices, durable skills, durable relationships, durable assets. Durability is not flashy. It does not trend. It endures. As the world becomes more volatile, durability becomes rare and valuable. Those who cultivate it stand out not through noise, but through stability. Stability attracts opportunity. People seek reliable partners in uncertain times. Those who remain calm, prepared, and adaptable become natural points of convergence. This is another reason walking away is not withdrawal. It is repositioning. It allows you to participate on your terms rather than dictated ones. Participation on your terms is the essence of autonomy. Autonomy does not mean isolation, it means choice. So, choice is what you are ultimately protecting. Everything else flows from that. At some point in every long transition, the conversation stops being about prediction and starts being about responsibility. Responsibility does not mean blame, it means ownership of decisions, direction, and outcomes. Once you understand the structural forces at work, pretending ignorance is no longer an option. You either adapt deliberately or you drift until circumstances decide for you. That is the real dividing line, and it cuts quietly through families, communities, and entire generations. The hardest truth to accept is that no one is coming to restore the old model. There will be no return to the conditions that made mass ownership easy, upward mobility predictable, and trust in institutions rational. That world was built on specific historical circumstances that no longer exist. Waiting for it to return is not optimism. It is refusal to update assumptions. Refusal feels safe in the short term because it delays difficult decisions. In the long term, it compounds vulnerability. What replaces the old model is not a single new system, but a fragmented landscape where outcomes vary dramatically based on preparation. Some people will thrive quietly, others will struggle loudly. Most will oscillate somewhere in between, reacting to pressure rather than shaping direction. The difference will not be intelligence or morality, it will be foresight and willingness to act before action is forced. This is where the concept of walking away becomes fully clear. Walking away is not abandonment of responsibility, it is assumption of responsibility. It is recognizing when participation in a system no longer aligns with your long term well being and choosing a different path while you still have options. It is the refusal to sacrifice autonomy for comfort when comfort itself is becoming conditional. Many people misunderstand this because they associate walking away with anger or bitterness. In reality, the most effective form of disengagement is calm and rational. Emotional exits burn bridges and attract resistance. Strategic exits conserve energy and preserve flexibility. You do not need to convince others that your choice is correct. You need to ensure it is sustainable. Sustainability is the standard that replaces growth in this new environment. Growth without resilience creates fragility. Sustainability prioritizes continuity over expansion. It asks whether a choice can endure stress, not whether it looks impressive during favorable conditions. This is a profound shift in mindset, especially for those raised on narratives of constant advancement. Advancement is not eliminated, it is redefined. Advancing toward greater autonomy, stability, and self direction is advancement of a higher order. It may not be rewarded socially at first, but it is rewarded materially and psychologically over time. The peace that comes from reduced dependency is difficult to quantify until it is experienced. One of the most important shifts you can make is moving from external benchmarks to internal ones. External benchmarks are unstable because they are set by systems that change incentives without warning. Internal benchmarks are stable because they are aligned with your values and circumstances. Measuring progress by debt reduction, skill acquisition, optionality, and resilience produces a very different trajectory than measuring it by appearances. Appearances are expensive, they require constant reinforcement, and they collapse quickly under stress. Letting go of the need to signal success frees enormous resources, both financial and psychological. Those resources can then be redirected toward building something real. Building something real takes time and patience. It often feels slower than participation in fast moving systems. That slowness is deceptive. What is built deliberately endures longer and requires less maintenance later. Speed is impressive, endurance is decisive. As you reach the end of this discussion, it is important to reflect on where you are personally, not where you think you should be, not where others appear to be, but where you actually are. What dependencies shape your life? What assumptions guide your decisions? What risks you are currently exposed to? This honest assessment is the starting point for any meaningful change. Change does not need to be dramatic, it needs to be directional. Direction creates momentum. Momentum creates confidence. Confidence reduces fear. Fear is what keeps people frozen, even when they know something is wrong. It is also worth acknowledging that choosing a different path can be lonely at first. When you step outside dominant narratives, you lose shared language and assumptions. Conversations feel strained. Priorities diverge. This phase is temporary. Over time, you find others who made similar choices, often independently, drawn together by shared values rather than shared consumption. Those connections are deeper and more durable. They are based on mutual respect rather than mutual validation. In uncertain times, those relationships become invaluable. Another important aspect of the final phase of this transition is acceptance of imperfection. No strategy is flawless, no plan is immune to disruption. Seeking certainty before acting is a form of avoidance. Acting with humility and flexibility is far more effective. You adjust as conditions change. You learn from mistakes without being defined by them. This adaptability is a skill that improves with use. Each adjustment makes the next one easier. Over time, uncertainty becomes less threatening because you trust your ability to respond. That trust is one of the most powerful assets you can develop. As systems become more centralized and automated, human judgment becomes more valuable, not less. Knowing when to comply, when to disengage, and when to pivot cannot be outsourced to algorithms. These decisions require context, values, and intuition. Preserving your ability to make them independently is essential. The future will reward those who can operate at the edges of systems without being consumed by them. People who understand rules but are not defined by them. People who participate selectively rather than reflexively. People who maintain optionality even when others trade it away for convenience. This is not a call to fear the future. It is a call to engage with it honestly. The future is not inherently hostile. It is shaped by structures that respond to incentives. By understanding those incentives, you can position yourself advantageously rather than defensively. At the same time, it is important to remain grounded. Not every challenge is a crisis, not every change is a threat. Discernment means separating signal from noise. It means resisting sensationalism while acknowledging genuine risk. Balance is achieved through steady observation, not constant reaction. As you move forward, remember that the most important decisions are often the quietest ones. The choice to reduce debt, the decision to learn a new skill, the willingness to reconsider assumptions. These actions rarely attract attention, but they compound relentlessly. You do not need permission to make these choices. You do not need consensus. You need clarity and commitment. Clarity comes from understanding where systems are heading rather than where they have been. Commitment comes from aligning actions with values rather than expectations. When clarity and commitment align, progress follows naturally. The world ahead will be defined by divergence, different paths leading to very different outcomes. Some paths will look attractive initially and become restrictive later. Others will look modest initially and become liberating over time. Choosing wisely requires patience and courage. Courage does not mean lack of fear. It means willingness to act despite it. Fear is a signal, not a command. It alerts you to risk, but it should not dictate your response. As this video comes to a close, the most important takeaway is not a specific tactic or prediction. It is a mindset that values autonomy over approval, a mindset that prioritizes resilience over appearances, a mindset that recognizes when it is time to walk away from structures that no longer serve you. Walking away is not the end of engagement. It is the beginning of intentional living. It is choosing where and how to invest your energy rather than allowing it to be extracted by default. Before we end, I want to hear from you. What did you think about what was discussed here? Do you agree with the direction things are moving? Do you see similar patterns playing out around you? Leave a comment and share your thoughts because these conversations matter and because clarity spreads when people speak openly and honestly. And as always, like the video if you like it. Don't forget to subscribe. And if you like the video, share the video. And just remember that all roads lead to MWA, men walking away, and cheers.
Nothing says you care like crypto. Nothing can compare. Nothing says you care like crypto. Oh, nothing can compare to crypto.